We're here at BSC in Mumbai, where Capital Small Finance Bank is up on the bourses. Joining us for a conversation are Mr. Sarvajit Samra, who's the MD and CEO, and Mr. Munish, Jain, who's the ED and CFO of the bank. Gentlemen, thanks so much for joining us for this conversation. I would like to start this day and the conversation by understanding that you're naturally getting more capital from this IPO that has come in. So how do you plan to deploy this?
Thank you, Pragatti, for this connect. The capital that we have raised is growth capital. It's to be utilized, be part of tier 1 capital of the organization and is growth capital.
All right, fair enough, sir. Thanks so much. Next, I want to understand that how do you see your earnings panning out, especially in the next quarter and FY25?
Pragati, firstly, before we understand, as Mr. Samra said, we are typically raises growth capital. We being an organization who is a retail centric, both on the side of both sides of the balance sheet, be it asset and liability. So we will continue to expand in a secured lending franchise with a retail deposit as our core source of funds. So that are the basic source, and we are here to go more granular in the geography where we are. Keeping those things in sight, so that we don't want to lose sight of what we are. So keeping those things in sight, we want to look forward to continue to grow our balance sheet. Whether we talk about from the top line perspective, whether we want to grow our balance sheet from the asset franchise, or whether we talk about the bottom line perspective. So bottom line, last year we closed around 90 to 94 crore rupees with the ROTA of 1.2. So that was the last, if I'm talking about FY23 number.
Right.
Yes, FY24 we want to expand it further. So yes, we got the growth capital now at the fag end of the year. So the majority of the growth will be start pouring in FY25.
Okay.
So in FY25, yes, we are ambitious. So we want to look into the, depending on the macro factors, we want to continue to grow through our businesses. Just from the bottom line perspective, just from the, I'm talking about the medium term perspective, we want to grow with the CAGR of above 30 to 35%.
Above?
30 to 35% CAGR on the bottom line perspective, on the profitability perspective. And this should be the combination of the growth coming from the top line growth and also further increasing our margins, increasing our spreads by optimizing our spread.
Okay, so secured lending will be your focus.
Yes.
That will be the main one.
Yes.
Okay, fair enough. So I also have some numbers in front of me that I took from the RHP as well. If you look at the GNPA ratio as of March 31, 2023, yours stands at 2.77%. And when we look at your peers, at least the immediate peers, Ujjivan Small Finance stands at 2.88, Suryodaya stands at 3.13. So relatively, you're in a better position as well. So how do you plan to rather bring this down or rather maintain these levels?
Pragati, before I start the answer, I just want to add a couple of things. Firstly, if we talk about our model, we typically follow a practice, or a practice we call it a no write-off policy, or no write-off practice, or no NPA sell-off practice. The number which you have mentioned, or if I talk about the number, FY23 number, that is around 2.8 and 1.4, that is GNPA and NP. This is with almost zero write-offs or with no NPA sell-off. So the number is typically purely recovery effort based. So we believe, we being a secure lender, the money which is outstanding or money which has become delinquent, or I'll say, is recoverable. It's a timing gap. Since we have a collateral, real asset collateral available in majority or other 85% plus of the asset. Right. So just going forward, we will continue our franchise with the similar avatar to have a better quality of the work.
And I want to also touch base upon the regulatory aspect a little bit here, because RBI had asked your bank to specifically put in place a system for online submission and e-tracking of MSME loan applications. So one, I want to understand what is the update on that, and second, what are the benefits of such a system if that is there in place, as to why RBI would ask a bank like yours to put that specifically?
So typically, Mr. Samra, you want to take it? Okay. So typically, what we understand, the objective of the regulatory body is to continue to improve our systems. So we respect the regulatory body in this regard, and rather we have a huge appreciation for them, that they are making us shipping up in a better way. So in the similar way, as you mentioned, in the RHP it is being disclosed also, just we being advised, or rather we have been advised to put in place the online system of tracking the MSME. The core objective is, if the MSME applied for the loans, we should be in a position to track it real-time basis where that application is, whether it is being processed efficiently or what is the timeline we are taking. So yes, we are in the process of implementing the same, so which will be done through a lots of platforms, which we are talking about the loan origination system specifically for MSME. So we are currently in the stage of evaluating that particular platforms and look forward to implement this as soon as possible.
Do you have a timeline in place for that, as soon as possible, as to when?
The thing is that at this stage, so this is basically more of the developmental activity. This is more of a developmental activities. Just at this stage, I will not be able to give any timeline, but just we want to do it as a basis.
Okay, fair enough. And since we are on the regulatory page already, I would like to touch base on one more point here. Your statutory auditors were not approved, rather the reappointment was not approved for FY24. So do you have a new auditor in place already, or has RBI communicated to you on any of these grounds?
As far as the statutory auditor is concerned, that is basically an industry level issue for that particular firm. For some reasons, that particular firm has been asked not to conduct the audits for all of the banking. Yeah. They are the auditor for some of few other dual commercial bank in the shape of a foreign bank or a private sector bank also. Okay. Just given we were in the listing process, so and keeping in view all the integrities of that particular thing. So with the understanding, with the right understanding with the regulator, they are still carrying on with as an auditor. Yeah. But now we are in the process of finding a new auditor. The process is already being completed. So we are coming up to a board, which is slated in a week's time or so, to get their views on it, and out of the name shortlisted, get the approval. So so that we can go and apply to the regulator body with the new names.
So the names have been shortlisted at least within the company for now?
Yeah, we have shortlisted couple of names, okay. And now we're looking for the guidance from our board members. So
okay,
how they want to
fair enough. And now I want to come a little bit towards the geography of the bank. You're largely concentrated in North India, specifically Punjab. Do you plan to increase this going ahead? And if yes, what states are you looking at particularly?
We started as a local area bank where the geography was very limited. Originally only 3 districts of Punjab. Then we got expansion in year 2013 from 3 to 5 districts. And of course, when we converted in the year 2016, this barrier was gone. But we are in a branch-led business model, and Punjab itself is a 22 district state. Right. So we thought it is meaningful for us into the business model we are to be all over Punjab, and along with that we started expansion to other states as well. For example, Haryana, which we now call is, we are in the process of making our next Punjab. Presently the branches are spread across 5 states of India, north states of India, along with the Union Territory of Chandigarh. There are 2 more states, again in a contiguity way, which we intend to add soon in the current financial year, and this is how we'll keep on expanding with a contiguity in a near future term. We'll be deep diving into the existing states and geographies where we are, and of course we'll keep on expanding to other states as well. Okay. Thank you.
Sir, you said that you have 2 more states planned for current financial year. You mean FY24?
Yeah. No, it is in the current calendar year. We'll definitely. Okay. Yeah, because only say some time is left for the current financial year, but in the calendar year, there's 24. Definitely, we'll be and expanding to other more states.
What are these 2 states? Which
states? As we are in 5 states, which are Punjab, Haryana, Rajasthan, Delhi, and Himachal. This 2 states which we are envisaging to expand is Jammu and Uttar Pradesh.
Okay. Fair enough. Thanks so much for that clarity, sir. My one last question to you both would be based on your borrowing mix. So again, I scanned the numbers, and if I looked at September 22 versus September 23, in the latter you haven't gone for money market borrowings or interbank overdraft. So why is that? That's my first part of the question. My second part of the question is, how do you see your borrowing mix changing going ahead?
Pragati, if you look into our balance sheet historically and what we believe it could be, we are typically a retail deposit centric liability franchise. Right. Over typically, if I talk about the balance sheet, 83% of the liability side is in the shape of deposit. Out of this, FY23 97.9 being retail, and September it is around 93.5 is being the retail deposit. So typically we are a retail liability centric liability deposit franchise. Yes, we do to the borrowings on selective basis, typically range between 3.5% to 4.5% or 5% of the balance sheet. So going forward, depending upon the macro factors, we intend to have a higher concentration towards a deposit segment only, and only on need to have basis move to the borrowings.
Okay, but if the breakup of these borrowings, like I mentioned that there were these two particular that were not visible in September 23, but they were visible in September 22. Do you see this trend lasting, or you might consider these two particular borrowings once again going ahead?
These two borrowings are typically to take care of very, very short-term needs.
Right.
So depending upon the need of that particular day, these things come on.
Okay.
So yes, it will continue to depend upon the day on which. So, but we will not be keeping any higher reliance on these two set of borrowings.
Okay, sorry, I'm just stretching this question ahead because I'm just recalling the numbers as well. Your NCDs also in the borrowing mix were up in September 23. I remember, I don't remember the exact numbers, but they were up as compared to September 22.
You are right.
Yes, so would that be a preference going ahead, NCDs?
NCDs in our balance sheet are typically over tier 2 capital.
Right.
So that is rather than being a plain vanilla NCDs, they are typically over tier 2 bonds. So yes, depending upon the need of the capital, that money will be keep on moving. But now since we have already raised the capital, so I'm sensing, we over senses, so there will not be an immediate requirement of raising the tier 2 NCDs.
Okay, fair enough. All right. Thanks so much to both of you for joining us and talking to us. It was a pleasure having you here.
Thank you, Pragatti.
Thank you so much.